yeah, we're seeing exponential growth. One reason is the market is growing, the industry is growing, so we get benefited from that. And we're only tapping a very, very small amount of the whole market size that we're talking about. Because if you look at how much US is investing into AI infrastructure alone, it's a lot of capital. Magnificent Seven spend $300 billion every year to invest into AI infrastructure. We're seeing a lot more companies paying a lot of money. That along we saw the Stargate initiative, $500 billion in US, another quite some $100 billion in UAE for the UAE Stargate version there. And even in Asia, we see a lot of the giant tech companies are putting a lot of money to build their own AI clusters, their own GPUs, and cloud capabilities there. So we're only tapping into a very small portion of the market, which can grow extensively in the coming years.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show spotlights GAIB, a protocol that is building a synthetic dollar for AI compute financing.
Yeah, so GAIB is tapping into this trend of bringing private credit on chain. So we've seen a lot of players do this, MAPLE being, I think, an exemplary player that's done this. I mean, even Maker has sort of trailblazed this field as well. And then earlier in the year, Larry Fink made a call in one of his big kind of prospectus for the year at BlackRock, basically that private credit was their next kind of major beachhead for democratizing access for that for retail investors. So I think where GAIB is going is very much where the puck is going as well.
GAIB it's connecting folks like me who understand DeFi. I want to be able to lend and earn a yield, but again, I just don't have the access to be able to, lend to folks that are running a data center of GPUs. I want that exposure. I'm bullish on AI. I'm bullish on the demand for AI compute growing, but I don't have the access or expertise to get into that. And so why not allow folks like us to be able to lend to those that are running those GPUs off chain?
Exactly. And this represents exposure that the average user can get to what I would call the pick and shovel play of AI. AI data centers and compute are the most valuable asset in, I think, the whole stack. And as somebody that watched NVIDIA 10X without buying it, that would be me. I feel like I sort of missed the boat on some of the AI plays, and there's not that many opportunities or ways to express your bullishness on AI. I mean, some of the Bitcoin miners are converting to data centers. There's stocks like Galaxy that are getting a lot of exposure to AI, CoreWeave, but there's just not a ton of players. So, that's in part why I was excited about this too, to get exposure to GAIB.
Yeah, the part of the story that will make sense to all of our DeFi listeners is they're going to understand this two-token design of having, AID as a synthetic dollar that is either staked and earning a yield or not staked, and maybe it's sitting in an LP on chain, or maybe you're lending it. But the key is that, we're able to benefit from a yield that is happening off chain. And so that to me is the unlock. There is a yield source here that does not exist across the rest of DeFi. We're used to lending to borrowers on chain who are looping and doing all sorts of other stuff with stable coins, but there's a real yield here that I personally wasn't aware of until we got to understand what GAIB was building. And so GAIB is, I think, bridging folks in the traditional finance world with those of us that are actually on chain. And so I think this is a revealing episode for folks to learn about a vertical that is going to grow a lot in terms of demand.
Yeah, and we talk about what the staked synthetic yield could look like, and I'll let you listen to the pod, but it would be some of the most competitive yields in all of DeFi. And then also Kony teases that I mean, I think there's just enough if he stayed in the AI compute market. It's a massive market, but they have their sights set on other frontier markets. And these frontier markets are, if you just imagine what could be even more bullish than AI right now, I think if you take a couple guesses, you might get it. But he subtly drops a bit of this alpha in the podcast as well.
So just a quick reminder before we get started, subscribe at the-edge.xyz. That's where you can get notifications for new podcasts. We would also ask that you subscribe on Spotify or Apple or YouTube. We're really pushing to grow our following on Apple and Spotify. So if you can write a review or share a link with a friend, we'd hugely appreciate it. And then lastly, a huge shout out to all of our partners on the Edge podcast and the Edge newsletter. They make it possible for us to make this content available to you for free. So if you go to the show notes, you'll find links to all of the partners that we are very proud to work with there. Be sure to show them some love, and we hope you enjoy the podcast. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge podcast and Edge newsletter. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over $1 billion in AUM across USDC and BTC products. And now with SYRUPUSDC by Maple, anyone can earn institutional-grade yield. Learn more at syrup.fi, and thanks to Maple for supporting us here at the Edge podcast and Edge newsletter. FALCON Finance, the team behind the fastest-growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. All right, let's introduce Kony, the founder of GAIB. Kony, welcome to the Edge podcast. How are you doing?
Doing great. Thanks for having me.
So GAIB is a very unique on-chain opportunity. It is a synthetic dollar for AI compute financing. And we're going to talk about, as investors, what do we need to know to actually get involved in GAIB as a protocol? So Kony, why don't we start with a bit more about the idea behind GAIB? I guess, like, where does the idea come from? Maybe you can give us a little bit of background on the legacy options for AI compute financing.
Yeah. Before I dig into more details about AI compute financing, I would like to talk more about GAIB, the name and where it comes from, and our inspiration. So GAIB is actually, we take inspiration from the Dune movie, Listen Al Gaib, which means GAIB itself means like the unseen and the future. And it is an acronym for three things that we focus on: GPU, AI, blockchain, or bond, meaning the financialization perspective of that. We're all big fans of Dune, obviously, but other than that, like, we also recognize the most important assets, which are GPUs in the AI era, that we want to make it financialized and tokenized to bring on-chain, allow people to invest into this asset and market. And that's the goal of where GAIB started from. And then regarding the market, like we talk about AI and compute financing market. Well, it is a very like nascent market in the AI compute sector, because a lot of people think when they come to their mind to thinking of like AI and cloud, they will think of AWS, GCP, Azure. These definitely are big public clouds that we use every day, and they have been there for many years in the past, like 20 years for the internet era. We call them like the older generation of cloud. But we have a new type of clouds, which is called neoclouds, NEOCLOUDS, neoclouds. So they are more dedicated to AI services, just came out in the past few years when we see an exponential growth of AI after the ChatGPT era. So these clouds, what they do is that they have dedicated AI services for training, for inferencing, for hosting your model, and even for like labeling your services there. So these clouds are up and rising. The several reasons because of that is for the old types of clouds, they are good at doing everything, being your server, hosting your GPU, getting your storage done, everything. But they're not too agile in terms of fitting the needs of all these up and rising AI companies. For example, if you want to train models, right, you may need to have dedicated APIs and dedicated models that you don't want to share with others. So that's why you would go to maybe a smaller or a newer types of neocloud that can allow you to fit your needs. And for these new types of neoclouds, because they're pretty new to the market and nascent to the market, so they oftentimes face a lot of difficulties in getting capital to scale up their network, scale up their operation. And the reason behind is for a neocloud to operate, let's say small scale of neocloud, 1,000 cards of GPU of H100 or H200 will easily cost $40 to $50 million in order to start this cloud company cluster. So it requires a lot of capital. And not to let alone saying we have a bigger cluster of 10,000 GPUs that would cost like $300, $400, $500 million there. If you look at what Tesla has loaded, like they have 100,000 more GPUs at X for training the Optimus robots, for training the robotaxi, for training the like supercomputers. So they spend over $2 billion in capex. It is quite significant of capital. And to finance this capital, you as a cloud company, there are only three ways. One is either you have like your own capital, your own revenue and profit. The second way is you go to VC to get equity financing, raise equity from VC, get a capital there so that you can buy more GPUs and scale up. And the third way is go to private markets, private lending from family offices, institutions, banks, etc. So that's the most typical three ways. But then, as I mentioned, as a nascent market, a lot of these clouds can only tap into the first and second channel. The third part of private lending is very hard for them. Because the traditional finance, they don't know how to price this asset. They don't really understand the cloud business, the unit economics of that. And it's like they're actually pretty slow in terms of like adopting these assets as a collateral or as an asset to be priced. So that's why a lot of these cloud companies are facing a lot of difficulties to get capital, cheaper capital. Because if you look at like equity and debt, like equity is very expensive if you in the traditional finance way of fundraising. So that's where I saw the opportunity because I have, speaking of my background, I have a background in traditional finance and crypto. Used to be at investment banking doing like credit research, equity research, and private equity, and then moved on to the exchange on the M&A side, and afterwards started a crypto VC fund to invest into infrastructure companies like Eigenlayer, Babylon, this type of projects. So I saw a gap in the market about the financing options for these AI cloud companies. And then this how like last year that I was talking to my co-founder, Alex, who runs a cloud company himself. I was like, hey, do you think there's a need for a finance company to service you guys? And he was like, yeah, definitely we need one. And the most key important thing is if you look at every asset class out there, there's always a finance company to service them. It happens in the car industry, it happens in real estate, it happens in aircrafts, like anything there. But how come we don't see a big one in the AI sector, in the AI infrastructure sector, which is we going to that era? That doesn't make any sense. That's the reason why we started a company, to fill in the gap to make this happen. And also by leveraging crypto and the most developed DeFi ecosystem to realize the economy side of things there. So in one liner, what we want to do is we want to be the bridge for the AI economy on-chain, leveraging blockchain and building the whole like DeFi economy above that.
Kony, I just have a follow-up to some of these new, I think you called them neocloud providers. I guess, so it sounds like from what you're saying, capital is pretty constrained still. So can you give me an idea, just a rough kind of high level idea? I know there's probably a ton of different ways to make deals with these companies, but like what does kind of like a traditional deal look like between one of these neocloud parties and then the financier here, I guess? Like what kind of margins are we talking to get financing for this kind of thing?
Yeah, sure. It also ties to how we work at GAIB, the models that we do with these cloud companies. So there are basically three ways. The thing we focus a lot on is the GPUs and the cash flow that will for us to tokenize. So the basic way is we just do overcollateralized asset-backed lending to this company. Meaning if you are a cloud company, how it works is you come to us, with your GPUs that, you have on your hand, and you have a contract that the customer is paying you, and then now you want to scale your operation. So you just come to us, collateralize your GPUs with us, and also the contract, the money that you're making. And afterwards, we'll just give you the money. You may promise to pay us back a fixed rate and a fixed duration. It's more like a loan model. And the other model is more like equity, meaning you own part of the GPUs. Let's say you own $50 worth of GPU out of 100, 50% of that. Then whenever these GPUs makes a revenue, then you as an investor, you're a holder of these tokenized GPUs, you get 50% of whatever revenue that they generate. And the third model is, a minimum return plus some of the revenue share for the upside there. And in terms of yield, how much are we talking about? Well, GPUs is actually a very, very lucrative asset these days. The ROI for a GPU is like 12 to 18 months, meaning the annual yield is 60 to 100% in some case. So you as a holder, that's the yield that you're getting. Of course, on the lending side, because most of the risks are being covered, you still see a good yield, like 15 to 20% is very common in these asset class. And compared to what we see in other asset class in the world, for example, real estate, they only give you low single digit yields these days, 8, 7%, and then T-bills give you 4, and these are giving you like 3-4 times of T-bills, even more so for such an asset. And the most important thing is they're asset back, meaning the GPUs, these assets behind are backing it. You're holding something onto it. It's just like pure credit lending to third world countries, developing companies where you don't know whether they can pay you back the money or not.
So for the folks that are looking to raise capital, that are ultimately like running these GPUs, what are their hesitations, if any, to working with someone like a GAIB or just working with like this like new frontier type financing?
I think this isn't much hesitation for them. That's also a reason why we grew a lot in the past 6 to 9 months, especially after like DeepSeek came out this year and then AI applications started to grow exponentially, because to them, we just function as like, another capital source. We understand the market. We understand how AI cloud business run. We understand the asset. We know how to price them. So the whole process for us is way easier to talk to them. Like straightforwardly, we won't go to them like the other traditional finance, like a bank, and ask, what is GPU? How do you make money? Because we are in this sector. We have the latest information of how GPUs are being priced, how much money they make, what is the return and payback period, and what type of protection that we should ask for when we actually do these deals. So we make sure that like we adopt the highest and the most stringent standard when we actually underwrite these deals on our platform and bring it to the investor side. So there's no reason that they won't consider us as another option to whatever solution that they have. And it is the reason why like we started off with only one cloud company working with us, which is my co-founder's company, to over 10 right now, covering more than 10 countries these days. And our GPUs in the pipeline that we can tokenize is almost $1 few billion in the next 1 year. So yeah, we're seeing exponential growth. One reason is the market is growing, the industry is growing, so we get benefited from that. And we're only tapping a very, very small amount of the whole market size that we're talking about. Because if you look at how much US is investing into AI infrastructure alone, it's a lot of capital. Magnificent Seven spend $300 billion every year to invest into AI infrastructure. And that's just Magnificent Seven. We're seeing a lot more companies paying a lot of money. We saw the Stargate initiative, $500 billion in US, another quite some $100 billion in UAE for the UAE Stargate version there. And even in Asia, we see a lot of the giant tech companies are putting a lot of money to build their own AI clusters, their own GPUs and cloud capabilities there. So we're only tapping into a very small portion of the market, which can grow extensively in the coming years.
Kony, there's one thing maybe you can explain to our listeners. I know when you and I first started talking, I asked this question, and I've seen a ton of people ask this question, this idea that, okay, well, you're essentially backing this synthetic dollar by GPUs. And I think people will immediately go to the GPU in their computer, which is sort of more like a retail, GPU that maybe achieves obsolescence in maybe 2 years or something like that. But can you just speak to the difference between retail grade versus commercial grade. And then something else you were saying offline is there's a whole standardized industry around this, I believe, where depreciation rates are very kind of the same across the board. And it's like, there's no guesswork. Am I kind of framing that right?
Yeah. So maybe I should do this, like actually explain what type of GPUs that we tokenizing and what we're focusing on and why we're doing this. And then I can talk about like how do we do the tokenization and handle the depreciation and the other things that you mentioned. Totally correct. Like a lot of people ask these questions because when it comes to an asset, regarding the GPUs that we tokenize, we're focusing on enterprise grade, meaning the H100s, H200s, GB200s, and GB300s coming. Why we focusing on this segment is that number one, they're highly sought after by the AI companies for usage. Number two is that it is actually very hard for you and I as a retail investor to invest in these assets. You can buy 4090, 5090s somewhere outside for $3,000-4,000. But then to own an enterprise grade GPU, let's say one machine of H200, 8 cores, would cost you at least $300,000. There's no way that, maybe some individuals are pretty rich, they can do so. But after you pass that, money threshold, the second difficulty that you face is who's going to use that? How's going to make money? And then how are you going to host it to make sure that, you can fit the users' demand there? Because electricity is the big problem. You can't just use your home HST to power up these H200 machines. So that's why we focus on these enterprise grade. It's hard to access by most people, and we want to decentralize the accessibility to these enterprise grade GPUs. And the second question is regarding tokenization. When we tokenize, how do we deal with the cash flow? How do we deal with asset value? Well, just tell you just use one example. For example, if we talk tokenizing in H200 GPU, what do we care the most? The most thing that we care is how much money they make. For example, if they're giving money to you, I care is whether you can pay me the money back. And how can you pay me the money back is whether you have revenue. And where do you generate revenue is who is your client. So these are the things that we all look at. And do depreciation play a key role here? Yes, it does. Because we want to make sure that after a year, if anything goes wrong, these assets are still worth something to cover up the initial capital that we pay you, right? That's like the bottom line. That's like the safety net that we will plug if anything goes south. And it's also the best thing about these asset classes. They have an asset value behind them that is backing it. On top, you have money cash flow paying you there. And regarding the depreciation, it's actually pretty standard across the industry. You look at CloudWave, you look at these more bigger type of neoclouds out there, Lambda, they all apply a industry standard 5 to 5 years in terms of depreciation cost there. These are non-cash outflow. If you learn financing, it means that it's not actually expenses. It is just how they do it on the book to actually pay less tax or to capitalize it. We use the word, meaning just expense the capex cost there. And the fact is, when you actually sell the GPU, let's say 1 to 2 years after you use them, H200, H100, you can still sell it at 50 to 70% of the initial asset value. So the depreciation is only there for a reference for most of the people for the accounting purposes. And we do take that into reference. So if it happens, as I mentioned in the extreme case, if we need to sell the asset, cover the cost, cover the initial capital, we will do it. The most important thing is to care how you make money, like how the cash flow is going, what is the yield is coming from. So that's the most important thing when we do it in tokenization side.
This episode is brought to you by MANTLE, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, MANTLE is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's BUIDL and other institutional giants, adding over $1 billion in TVL. and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi. Kony, one thing about GAIB that I remember thinking about when we first, learned about the protocol is, the fact that, I guess this is technically an RWA. So maybe talk to us about why is compute, this valuable RWA?
Yeah, sure. I think if you look at the AI supply chain, right, I always describe it as a smile curve in the AI supply chain. On the rightmost is actually the AI applications. They will capture more values going forward. We have seen quite some AI application company making a lot more money these days. And on the left-hand side, these are infrastructure companies, which are like the ones, the cloud companies, data centers, GPUs manufacturers. They capture most of the value because whenever you chat on ChatGPT or the other AI applications, you need compute to power that. You need a compute to do every ask, image generation, video generation for the model that you're using. So they're just the most important elements in the AI model, just like an atom for any chemicals there. So that's why, it is very important. Whenever you do anything, you need compute. So it makes it the most precious commodity in the whole AI era. And regarding this precious commodity, where is the asset? What is the asset is empowering that? And these are GPUs, because they are the ones doing all the computation, providing you with the results there. And if you look at the whole AI industry, for you to invest into, AI application companies, anything you can invest in them, probably not a lot. But if you want to go back to the infrastructure side, GPUs is actually definitely the asset that you can invest into this, the most core and fundamental asset to empower the whole AI economy. And because of that, that's why GAIB is focusing on this. Not a lot of people can tap into the AI infrastructure side, as I mentioned earlier. So we want to decentralize the accessibility into this segment of the market, which captures most of the value going forward. And especially if you look at revenue for all the AI supply chain, NVIDIA, CoreWeave, these cloud companies makes a lot of money because you need them for doing any computation there. So, and why is it the most important RWA asset right now in these economy? Because we are living into AI era. We came from the mobile era, we came from the internet era, but going to the AI era, this is the asset. This is the gold shuffle they want to invest into, which can give you the ride to the exponential growth of the whole sector.
Kony, can you tell us about AID? So the synthetic dollar is the centerpiece of the protocol. And I guess how is the synthetic dollar backed by GPU yield? How does it actually accrue value?
So the AI dollar is actually the product that we're promoting. So it functions more like an ETF, a portfolio for tokenized GPUs. So when you actually deposit $100 into the AID, you get $100 AID back. And underneath, what we're going to do is we're going to have you allocate the $100 worth of USDC or USDT there into different types of tokenized GPU deals. Maybe $20 in deal 1, $20 in deal 2, $30 in deal 3, and partial of that will go to T-bills for liquidity. And this AID is actually, as I mentioned, function as a portfolio of tokenized GPUs. So underneath, whenever these tokenized GPUs make money, AIDs generate yield. So what you're getting is diversified portfolio of different GPU yields there, whether they're H100 from company A in Asia, or whether it's H200 from company B in the States. You get a diversified portfolio. So that's how we offer the yield back to the user. And where does the yield come from? The question is, the people always ask it, how does the yield goes back to AID? Where does it come from? Well, I think the reason why we focus on these AI infrastructure assets is, number one, they are actual real assets from the real world, from the real demands, making actual money. They're not like all those DeFi token incentives where we just doing our borrows, as Vitalik mentioned. They're actually from the external part, which we want to bring onto crypto. And how does the money actually makes and how they come from is,
I want to sort of crystallize this whole process from start to finish, if you can, for us, Kony, maybe like, how do you go about meeting a customer? Like, who has the expertise or the network or the relations to even find these people to begin with? And then can you walk us through a process of like, how do they get money? What does the deal look like? How long is the deal? When is the deal done? Maybe just kind of start to finish from origination to end, if you can.
Sure. Yeah. So number one, starting from like, how do we find these customers, find these cloud companies in data centers, right? It all comes from a few things. One is our own networks. I'm pretty familiar with different cloud companies in Asia side as well as the States, and because of my co-founder Alex, and he's also in the GPU cloud business, so we do have some industry connections directly there. Pretty familiar with the whole like semiconductor supply chain as well. That's where we saw the initial group of customers and clients, and then when these clients do something with us, they were gonna spread. They spreaded the words. So now, like a lot of these newer like cloud company partners that we're working with, they actually refer by all customers and all friends there. So that's how we expand the network. And going from how the end-to-end process work is like this. Well, whenever there's like a cloud company come to us, we will first do a preliminary DD with them, meaning we ask them several questions. Number one, what is your company like mainly working on? What are your plans? How much do you want in terms of financing? What GPUs do you own? What fintech year are they from? And also like how much do you make from the client side as well? So after these questions they answered, we actually screen them, because we have two criteria. Most important criteria when we do a tokenization in the initial phase is that number one, we have to make sure that they have the asset. So we don't do with any neocloud companies without any asset. Yeah. Second thing is we do want to make sure that they have a client. Make sure that they can actually make the money, pay the money back whenever we give them any financing solution there. And if these two criteria match, then we'll go into a more deeper due diligence process. And these will be facilitated by not only our team, but also the third-party experts, including auditors, appraisers. Because at this moment, what we want to make sure is, number one, are these assets that the cloud company claim actually exist? And we also want to understand how much they are being valued at. And also, if they have a client paying them money, we're able to see the paying records, how much they make, what's the payback period, all the financials, and even the capital structure. So we want to make sure that it is a solid company that we are doing financing with them, and then giving the money to. And afterwards, after the full due diligence pass, you check the seat, commercial due diligence, financial due diligence, operation due diligence, and the legal due diligence. Everything passed, then we're going to structure a deal. Say, hey, how much money do you actually need, and for how long, for how much you can pay us. Is it, as I mentioned, is it more like a fixed rate, fixed duration type of deal, or is it more like we owning part of the equity into the asset that we can do a revenue share in terms of the revenue that you're making? And after the deal is being structured, packaged, priced, then we tokenize the whole thing, offering it to both Web 2 and Web 3 investors. So on the Web 3 side, it's more like the DeFi users through our bot buying AID. That's more the Web 3 user. On the Web 2 user side, we also have quite some family offices, institutions, and funds that want to tap into this sector. And that's how we tap into both markets' liquidity. And this is how we do the origination, getting the GPU being tokenized. How does the money pay back, right? Where does the yield actually goes back to the investor side? How does it work? Well, let's say after a month, the cloud companies make money, the clients pay them, then they will have to pay us back the fiat money. We can do on-ramp, paying these yield back to our investors in stables or in our token, in whatever way that they feel comfortable. And even for Web2 investors, we can just do direct fiat payments there. So that's how we do the whole tokenization process and getting the money back to the investors.
Okay, I just got a quick follow-up to that. So say, let's just go through a worst case scenario. You've done all your vetting. You give somebody this loan to buy GPUs, and for whatever reason, the business doesn't work, or maybe something nefarious happens, or who knows, right? Just some sort of unforeseen act. How is GAIB made whole in these scenarios? Is it like the strength of the contracts you've already created? Are they over collateralized in some ways by, other GPUs or something like, or do you take the GPUs back? Like, yeah, can you kind of fill in those gaps?
Yeah, of course. Like in the extreme case scenario is, that will happen only under a few ways. Number one, the clients are not paying that, meaning the contract doesn't work anymore. Maybe the client bankrupted or they defaulted or anything. And the second way is, the GPUs are worth like nothing. They don't worth anything. And, the worst case is, we will go to zero. But most of the time, we won't happen. We have two lanes of protection here. So if, say, the cloud companies do not like pay us back money, then we have actually the ownership and control of the underlying asset. So this time, what we can do is we can either sell the asset back on the secondary market to get a goodie and pay the investors back because it's over collateralized. Like for example, if for $100 worth of GPUs, we can only give them $70, meaning 70% of like LTV there. So we can make sure that it's over collateralized. They have a contract, the client paying them with good payment records. So such that, there's the risk of them defaulting and go to the money of our principal go to zero is actually pretty low comparing to all those the other asset type of, let's say like unsecured lending to some company based on their credit. So yeah, that's what we do. And also we can, because of our network, we can easily like get these GPUs out to the other cloud companies that want to buy them, even want to host them up and continue to service the contract to the clients as well. So that's something we can do. The value add that we can offer to the end cloud companies and even our investor side.
All of the folks that are helping to discover new borrowers, helping to set those terms, doing due diligence. Can you just talk us through like how are those folks incentivized? Is there payment of like some part of the deal, like when they're making their payments to GAIB, is a portion of that going to these folks as like delegates acting on behalf of GAIB, or is there like a payment in the GAIB token to those folks? Anyways, how does that all work?
Yeah, they're mostly service providers. For example, the legal, the auditors, like they pay on by deal basis, like on a fixed amount. Usually, that's how they work. And then for the others who brought in the deal, then right now it's us, like it's GAIB bringing the deal to the platform, tokenize everything. And what we charge is that we take a cut for tokenization. We take a tokenization fee, and also we take a cut on whatever the yield is being made by investors. And what we envision the GAIB to be is actually to become a platform, meaning there will be more operators on the GAIB platform, just like Lido. For Lido, we have a few operators operating the staking with ETH there, right? So it can be the same thing. Ultimately, we want to become a platform. There will be more operators. So whenever they bring in deals, they can take a share of the cut of whenever the revenue and fees that investors make. So yeah, we want to scale, and it's only becoming a platform and getting more operators on can actually grow bigger. And we actually have like quite some interest from the other funds operators that want to come in.
Hey folks, I want to tell you about our sponsor, GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to gearbox.fi. RUMPEL Labs is revolutionizing DeFi. RUMPEL lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using RUMPEL to unlock instant liquidity and maximize their yields. So join RUMPEL today and start spinning your points into gold. Learn more at rumpel.xyz. Say hello to Puffer UNIFI. Puffer Finance is expanding beyond native liquid restaking with new products such as UNIFI-based ROLLUP and UNIFI pre-confirmations AVS. UNIFI is not just another L2. UNIFI is a based rollup, one that will solve L2 issues, such as slow withdrawals versus instant withdrawals with Puffer UNIFI. Puffer UNIFI is fast, capable of sub-second transactions. UNIFI also has boosted Puffer points, which means if you bridge assets, you earn boosted Puffer points and rewards from dApps on UNIFI. Puffer's core products mean a bright future for Ethereum. Learn more at puffer.fi.
So we have this 2 token setup that I think we're all getting somewhat familiar with now. It's AID and then it's staked AID. One thing that I'm curious, so after this alpha program that you're in, do you have any rough estimates? Like, I'm assuming you've already done some of these compute deals. What does the yield start to look like that you're generating? And maybe what does it look like for the staked AID? And can you kind of further define how that relationship works?
Sure. Yeah, just like the other select dollars like USDE and SUSDE. So we're going to have a non-yield bank version, which is AID, and a yield bank version, which is SAID. So the staking there, meaning we have a stake, we actually get the yield. And because of that, we have pretty good real world yield underneath. And as I mentioned previously, it's going to be the lowest is in the range of 10-20%. So with the staking version, it can go out, let's say 2 times multiplier, then it goes to the 20-40% of yield that we're targeting. So these are actual yield. It's not come from pure token incentive there. And I think that offer pretty good incentive for people to enter into AID and get some yield from the real world, not only from our token incentives.
And then one quick follow-up. So when should users be able to expect they can stake AID and start generating some of these, I think you said 20 to 40% yields?
Yeah, so it's coming after the AID Alpha program. So we're targeting in the next few months.
Kony, one other detail there in terms of the stable coins that are deposited and used to mint the synthetic dollar. Is there a ratio there of how much of those deposited funds are going to be targeted to be lent out to borrowers versus is there some reserve that will be held in yield earning protocols on chain?
Correct. Yeah. So we have an on-chain reserve for a portion of the asset that underneath for the AID, and the rest will be used for doing these tokenized GPU deals there. And yeah, we're gonna make sure that we can have a good liquidity buffer. And these deals and these assets will go into more liquid tokens like T-bills on chain. So you can feed any liquidity needs if that's needed.
So we talked quite a bit about how are these deals being set up for financing AI compute, but I just want to get down to the brass tacks of how do you make money. So what can you tell us about, if everything goes according to plan, there's money on chain that is being allocated to folks who need it to finance AI compute. How do we ultimately get that return, through holding the AID synthetic dollar?
So how does the AID holders make money here? It's actually very simple. You having AID now, if you want to get yield, you can just stake it. Otherwise, if you want to use it in the DeFi for more degen play, for example, leverage it up, looping it, or go to use it in the Pendle structure to trade and speculate on the yield, you can also do so. So the whole goal that we want is after tokenizing these GPUs and bring it on chain, we want to build a DeFi economy. There's always a product that fit your risk and reward appetite. And that's exactly what we want to offer you. If you are just a passive investor, you want to get yield, you can just hold AID and stake it. If you are more degen, if you're more speculative, then you can go maybe trade the PD and YD tokens that we're going to have. And also you can do lending and borrowing to leverage up yourself as well to get higher yield. And even more so if you want to say, hey, I want to just temporarily use AID as a collateral to borrow against it and use to maybe have some short-term liquidity, you can also go to a lending protocol with that. So there's a lot more things that we can do with AID. And ultimately, if you still hold AID, as I mentioned, you get yield. That's how we make the money pays back to you as an AID holder. It's just pretty similar to you holding, let's say, USDE or USDE side. So in terms of how how it works in terms of getting yield. And then regarding how we make money, right? So GAIB as a platform makes money in very simple ways. Just like what Lido did. Lido is a platform for liquid staking. They offer the infrastructure for you, and then they charge like a 10% platform fee, right? That's what they charge for. It's exactly the same thing that happens to GAIB. We charge two fees. One is like a tokenization fee, where you use our infrastructure, you use our tech, and the tokenization. Then we charge like a percentage for that. And then the other thing is, as an investor, you make money out of like GAIB's platform by buying AID and then these tokenized GPU deals. Then we'll also take a U cut, 10 to 20% of platform fees. Then all these fees will go back to the protocol as the treasury side. And ultimately, it will be used to buy back and burn our token. That's why the value accrual will most likely go to, not most likely, will definitely go to the token holders there. That's the reason we have like a governance token. We have the GAIB token for.
Is there any planning or expectation of like which protocols will support the staked version versus non-staked version? Like, I'm thinking you've already got Pendle integrated, but like, can we expect dedicated pools through something like Morpho where you can like lend and borrow against these different assets?
Yeah, obviously. Yeah, we'll actually be integrated as most of the DeFi protocols that we are familiar with. For example, the DEXs, the lending protocols like Morpho, and also the Pendle for the liquid yield side. Because the goal for AID and SID is to make it like a currency for people to use. You hold it for yield, but also if you want to use in DeFi for all the utilities that we are familiar with, then you feel free to do so. And we actually have like a Morpho pool running for the PT of AIDA USDC. And yeah, so that's why we'll definitely go through all the DeFi integrations, as many as possible, to get AID out to different chains, to different protocols, and to all the utilities available.
So what stage are you at with the rollout of all of this? I guess like where are you at in your roadmap today? What's next that people can start to get excited about? Is there any kind of new product lines outside of AI that you're looking into?
Yeah. Right now, we are rolling out our products. So we've done the first like Web3 GPU tokenization project in the whole space since the early this year. And then 2 months ago, we launched the AID Alpha campaign, which is the pre-deposit campaign into the AID that we mentioned earlier, the AI synthetic dollar, backed by like these AI financing deals. So we're running that for another month or two for an incentivized campaign there. And afterwards, we will launch our mainnet AID, which is like fully backed by these deals, and with all the full DeFi integrations that you can think of, lending markets, and also DEXs, and then structured products like the liquid yield protocols like Pendle. We have them integrated now, but we integrated further with like different chains type of Pendle there as well. And then afterwards, right now, we focus mostly on like the AI compute asset, which are GPUs. We can focus on the other assets ultimately because we're pretty asset agnostic. We started off with GPUs because they're the most needed infrastructure right now in the AI era. They make most of the money, they generate most of the cash flow. Nobody can tap into that like more directly other than us. That's why we want to decentralize it. And then going forward, if there are more computation assets that's needed, it could be ASIC, it could be the other types of chips that come forward, then we're happy to tokenize that as well. And then even other than that, in the whole AI era, we're seeing a lot more interesting things coming up. Interesting hardware, not only on the compute side, but also on the usage side. For example, robots, for example, robotaxi. So these are the things that, GAIB as a platform can also tokenize and bring it to the platform. Because going back to our slogan, going back to our vision, is we want to be your bridge to the AI economy on-chain. And these are the AI economies going forward.
Kony, is there any plan for like a transparency dashboard? As someone who has no expertise to be vetting these deals, I have no insight into the folks that would be borrowing from GAIB. Just getting that information, I think, is going to be really like empowering for someone as a potential new lender or potential new participant in GAIB. So yeah, anything there to share?
Yeah, of course. Yeah, transparency is always something that we value the most, especially in crypto. So how we're going to do it is the simple ways. One is the transparency dashboard, where we'll be listing out all these tokenized GPU deals and some of the details there. And these deals are, because they are like DD'd by the auditors and third party, like independent auditors, not ourselves. So they will be having a vet and having a stamp on, okay, these deals are being vetted and done by GAIB there. And the other thing is, in order to enable more continuous on-chain monitoring, we also have like a node network. This node network will actually allow like independent node runners to stick our GAIB token to actually run a node. And what does the node do is they will keep on supervising the underlying GPUs that we tokenized. So as such, you as an investor that you buy, let's say, tokenized GPUs deal, then you can see like how the GPUs are being positioned, whether they're staying at the initial position that they promised to. Do they move to somewhere else? Because it's immediately tracking, continuous monitoring. So you know if anything goes wrong there. And also on the performance of the GPU, are they being used? How long are they being used for? So the node network that we built is to serve these on-chain monitoring. And in addition to that, plus the off-chain continuous like third-party auditing and reporting there, we actually make it more transparent to people, and they will know like, you know, what are these GPUs, or where they are, how much they're making, how well they're doing. So this is the transparency that we can, you know, bring to our investors afterwards.
So Kony, if listeners go to aid.gaib.ai under the Explore tab, there's a points program. So there's this like SPICE points program. What can you tell us about that, and how is Pendle involved? It looks like there's a few pools on Pendle. I'm wondering like, what's the opportunity there?
Sure. Yeah. So we're running the AID Alpha, which is our pre-deposit campaign. The easiest way to get involved is actually going to our front end, as you mentioned, and just to choose a pool where you feel comfortable, or the chains that you want to deposit in. You can do USDT, USDC. We're supporting like OpenEther's CUSDO and also USR from Resolve as well at the moment. And then there are other ways of getting points and getting like involved in GAIB AID Alpha program, as you mentioned, is actually go to Pendle and buy and hold our YTs there. So we're actually on Pendle for two pools. One is like the AIDA USDT and also the USDC pool. And each one of them has like a PT and YT markets. And right now, they're getting pretty good yield. Like in the past few weeks, we're actually on the top 3 in terms of the PT yield on the Pendle's market. And also, if you are more degen, you want to get have farming to the max on our AID points, you can actually play the YT play there. So there are a lot of opportunities that you can play around with. Just check out our website on the front end, on the front page, and also on the Explore page. There are different opportunities that we offer.
So if listeners go to pendle.finance, if you look up AIDAUSD or AIDAUSDT, there's huge yields there. So like something like 11 to 12% can be earned with the PT side of the market. And then otherwise, if they end up buying the YT, just, heads up, there's like a multiplier there in terms of like leverage you're getting through that exposure, or just the points that you're earning through the GAIB SPICE program. So just reminder, none of that is financial advice to buy any tokens, but that's how the program works. So you should check that out. But otherwise, guys, I think this is a great place for us to wrap up. So first, I want to remind listeners they should learn more about GAIB by going to GAIB, that's GAIB.ai. So you can go there and check out and learn more. And then follow GAIB_AI on X. Follow Kony's personal handle. It's Kony, KONYK 001. You can learn more about the protocol from his account as well. But otherwise, Kony, thank you so much for coming on with us. It was so interesting just to dig into what happens off-chain. I think like what you've built represents a type of mechanism that we thought would be built when DeFi was first getting its start. Like that idea of offering financing off-chain and allowing, the capital efficiency of DeFi to, run its course, but to be able to merge that with the demand from traditional finance. And so it's really cool. I think this represents like the best of what DeFi has to offer to TradFi. And at the end of the day, someone like myself, like I don't have the access to these types of deals. I don't have access to the types of clients that GAIB would lend to. So what I'm able to do is keep my money on chain, hold this yield-bearing synthetic dollar, stick to what I know, but then be able to benefit from, all of the coordination that's happening from within GAIB, the protocol. So anyways, any final word for us before we go?
No, I think thanks for having me. It's a great episode. So I hope anybody can learn more about GAIB and also AI synthetic dollar, because to me, I think that's the next type of next generation asset that you can hold, you can tap into. And that's also the goal. What we want to do is to break down barriers, bring up new markets, bring up new assets. So this important thing in the AI era is compute asset. So I hope anybody can get access to it.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.